I want to talk to you about the price of oil and the movements in the price of oil and how us poor retail investors were not really able to play the move in the price of oil despite an obvious fundamental factor like the bombing of 5% of the world's oil processing capacity and it being losing 5% of the oil as a result. And so how could we have made any kind of trade on that and made money from it?
Yeah, I think unless you had information about this strike specifically, I think even the institutional investors were caught off guard because the markets were closed over the weekend. And as soon as they opened, if you were short oil with the contract or if you were short energy in any way, shape, or form, you definitely got a clobbering.
Right, you got your ass handed to you.
Definitely.
Okay, so let's not take too much glee in the institutional traders who thus suffered. But all right, so what could we have done? Like we were looking just earlier before you got here, we were looking at the XXX long oil ETF, oil U, I believe is the symbol.
Yeah.
And while the bulk of the move was on the open because it immediately priced in the difference in the oil price, which at that point I think was up 18% at 6 a.m. or at 9 a.m. this morning. So you could have still bought it because oil did move up a little higher throughout the day, and I think you could have bought that ETF at 21 and change, and you could have sold it at 230 when they do their NAV calculation for $1.50 higher. So that was really the only way that I saw with my limited intellect how I could have played it, because I'm not an options or calls kind of guy, and I'm not really that adept at futures. And besides, we can't trade anything in our paltry local banking accounts anyways until the market opens at 9:30 in the morning.
Yeah, it's tough. It's tough to play something like that. I mean, if you knew this news was coming Friday, there's a lot of way out of the money options you could have bought. I wouldn't be surprised if someone close to the matter knew about this and maybe profited off something like this. From this point on, though, it's kind of a fundamental story. So the question now is, it's a lot of production that's offline. How long does it take to recoup it? The issue is, initially Saudi Arabia said that they would be able to get most of it back relatively quickly. Now it seems it might take a little bit more time, and that's why I think you kind of had that rally. Also the risk of geopolitical escalation. So what that means is if there's a strike against Iran, if there's another strike against Saudi Arabia, after one punch they can sort of muddle through it. But if more infrastructure gets hit and becomes a hot war, that's what I think the price is really pricing in. Just one more comment. If you look at the 2020 oil futures a year out or so, they're only pricing an extra $2 or so. So for like WTI. So that means that the market thinks that within the next couple of months, this supply disruption will either be, supplanted by other production from somewhere else, and that Saudi Arabia will be able to deal with it.
Sure. The price rise in oil, if that's, if that sticks, if it doesn't back off back to where it was, that brings a whole bunch of new oil into a profitable production scenario. And that's probably going to inspire that oil to come on stream, correct?
Yeah, exactly. That's what I think people are thinking. And in general, there's some shut-in capacity in Saudi Arabia, in some of the OPEC producers, in Russia specifically. And if it's a million or two and things actually do get desperate, I think they'll be more than capable of relatively quickly bringing that production online. But if it becomes a very hot, fast war, it might take, I think the price of oil could go a lot higher. At this point, though, I think it's, you could chase it, but probably not the best way to play it, for sure.
Or we could just send our own drone over there and bomb it some more. Okay, well,
it's market manipulation there.
Yeah, that's right. Okay, so enough about oil then. Tell me about what's going on in the cannabis space. Today's pretty much a uniform down day, except for a few names in the large caps. What's going on in cannabis?
Yeah, so we've talked about this, I think, a couple of months ago. These cannabis producers have disappointed with their earnings. Many of the reasons are the rollout was bad, store counts were really low in places like Ontario, and the black market hasn't been stamped out, especially in places like BC. The whole lottery system was really poorly run, and so you had this huge issue there. And so what that means is you had this bad Q2, midway through this rollout, But looking forward to Q3, Q4, you're probably going to see better numbers come out of some of these producers because of all these issues being resolved and any internal bottlenecks. So that's one of the aspects of what was happening. Another one is that there's a lot of paper that's kind of hit the market, whether it's new issuances, whether it's stocks being unlocked, shares being unlocked, options being granted. And so what happens is it's a supply and demand situation as well. And I think on the street, a lot of people have many private deals that are slowly coming out or being delayed. And there's sort of not a lot more appetite. So if you think about a finite pile of money, there's only so much of that to go around, even if it's growing and there's more interest in the space.
Yeah, we were actually looking at talking about one of our companies today that, it's kind of like, well, we can't realistically expect participation in private companies from the incumbent investment banks who have been mostly financing the cannabis companies because they've become so jaded and so cynical as to the representations of cannabis CEOs and entrepreneurs who have been promising the world and ultimately delivering quite a subset of that. And even, so like, I don't want to belabor the point with Aurora, but to me it was like a real telling thing that one of the largest companies in the space could come on in, less than 30 days ago and project a expectation for a revenue number and then be so far off a mere 30 days later. That to me demonstrates that, well, this is a market that just doesn't have the experience and the management sort of depth to be able to describe what even their future looks like.
Well, it's surprising. You said 30 days ago this guidance came out, and the quarter, correct me if I'm wrong, when did it end? Was it June? I forget it. Or July? When's Aurora's quarter end?
I couldn't actually answer that right now.
Yeah.
So I was just referring to Cam's representation here.
But in terms of, sorry, I don't think I saw that, but in terms of guidance, I know they issued guidance and missed both of their, I think, guidances that they provided, right? And I think those guidances came at or just shortly after the quarter ended, the fiscal quarter ended, which beleaguers your point that clearly they're not fully on top of the operations of what's happening. Listen, I think we've hammered a point home many times that the U.S. producers have a much better set of catalysts, set of fundamental backdrops that warrant, I think, more investor attention. I don't think it's serious that the Canadian producers will be able to compete in a large way in the U.S. And if some federal banking and other regulatory things get passed, it's going to change things. Even so, even forgetting that, a lot of these guys are very well capitalized now too. There has been a lot of debt deals recently, which are non-dilutive. I think GTI, I think everyone had Harvest had something. Ianthus just recently had something where it's 8 to 10 to 12% debt that's non-dilutive, and the backdrop is so much better in the U.S. where you have, for example, the fact that you have the full capture of the margin, right, from seed to sale.
Okay. So you think the U.S. is still in better shape relative to Canada?
Yeah, and there's a lot of other catalysts. For example, for Canopy and the rest of these names, in the last 13, 14 months, there's been multiple uplisting catalysts where they went to either the TSX or they went to the New York Stock Exchange. All these companies have already done that. So it's in the past.
Right.
And while I think Canada will eventually develop into a solid market, it might be another year or two while all these issues are kind of resolved. Black market slowly fades, whereas I think institutions, a lot of them can't even touch the U.S. producers or the U.S. players, and so that there's a lot of barriers there that are catalysts in my view.
You bet. All right, Dmitry, great contribution as usual. Thank you very much for joining me.